technical winning in the exchange? To the question of when should I invest in the stock market, Mark Mobius answers when he has money and adds, there has been no other investment instrument that has paid as much as the stock market for 200 years. To understand why the stock exchange is such a profitable investment tool, you should listen to the proverb of the Americans. You don't get rich by working for others. If you are a salary worker, save as much as you want. Warren Buffett, who is the world's richest protectionist with long-term value investments in the stock market, tells this fact in his speech. Yes, money is in trade, but unfortunately, it has to be learned through the master-apprentice relationship. You have to invest your money in something. If you keep your money in your wallet, you will have made zero investments. Unfortunately, if you take your money to the bank right now, you are making a zero investment. Even if you buy US bonds, you make zero investment. I have no doubt that in the long run a portfolio of stocks will yield much better returns than non-revenue generating assets such as paper money or gold. Yes, money is in trade, but unfortunately, it has to be learned through the master-apprentice relationship. You can become a commercial business partner without knowing how to trade in the stock market. The shop perception of stock market investors is that they imagine that they will become rich when they enter the stock market. You can become rich if you make long-term investments and follow the right growing companies. Bring companies to those who let the stock market flow. Peter the Witch suggests they go to the nearest casino instead. Long-term investment is an investment in the future, and predicting the future is difficult as it contains many unknowns. Long-term means trust. It means risk management. Before becoming a partner in a company, the investor must ask himself some questions. Buffett says that he will not buy 100% of the company, not even 1/millionth of the company. If this very important boss is reliable, no matter how solid the company is, no matter how much profit it makes, you will not be able to benefit. If you had the money, would you buy the entire company you were considering? The answer is actually the quality of the company. Nobody wants to buy an entire company that is at risk of going bankrupt or has a loss or profit problem. Here, passing the first question shows that the company is solid, that the debt is payable, and that its profitability is continuous or increasing, and it means that it can be a safe partner. The second question you should ask is the boss reliable? For example, if you have seen manipulation news, you should stay away. If the boss is reliable, no matter how solid the company is, no matter how much profit it makes, you cannot benefit, as the bosses deal with their shares instead of dealing with their business. Continuous or increasing profitability is not a common feature of these companies. These two questions make you trust your partner in your company. To limit your risk, the question to ask is whether it pays dividends. In fact, although it is better for the company to use its profit in investments that will increase its value, unfortunately in our country, dividend is a quality of the company. Third, and generally the ones that give dividends are honestly managed companies. Also, in case of a bad market tomorrow, you can close the screen as if you have a rented house and say that my tenant is solid, and you can make additional purchases. Moreover, in times of crisis, dividend-paying stocks fall less than others. An important condition for limiting risk is the price you get. Goods are earned from buying, and buying at a good price can earn you money from the first week. With Buffett's expression, the price you get should be such a price that you can easily watch the company's price drop by 50%. A share with a price of 5 liras is not cheap at 4 liras and not expensive at 6 liras. If the value of this company will be 11, you should buy it. Do not say that good companies will fall below their value. Believe me, those who do not expect to buy at an affordable price will be short-term in the first correction in the long term. Patience in the stock market is not just waiting for the stock, but also waiting for the purchase price of the stock to drop. In other words, in every partnership, you must have the patience to wait and to get a reasonable price. The capital required to buy Buffett's company was obtained by managing other people's money in the stock market and earned a lot for its partners. When the prices in the stock market were inflated, that is, in the bubble period, he could not find suitable stocks to buy, and he left the stock market by selling many of his shares and bought his current company by waiting for the right time, that is, the price. When we have money in the real world, if we can't find a suitable opportunity, we continue to hold our money. In some periods, there are no suitable opportunities in the stock market, and we must patiently wait for the right companies to come at the right price. Believe me, those who expect to buy at a reasonable price will be short-term in the first correction in the long term. Do not overwork in the stock market. As the expiration date of their products approaches, companies collect them from their sellers and send them to big chain stores at a discount. A product with a shelf life of 2 years is put up for sale in these markets at a discount if its expiration date is 3 months. Thanks to high sales volumes, the products reach the end user before their expiry date. Let me give my answer to those who are wondering that I will connect it to the stock market without explaining so much. Buffett likened the market to a sick man and advised us to stay away, except for trading, because the gentleman who offers exaggerated high or low price offers according to his morale is not a person to be withdrawn from our perception of the market. If you buy and sell frequently in the male market, that is, in the stock market, your perception may deteriorate, your emotions may be triggered, and you may buy companies whose expiration date seems to be a suitable opportunity for you. Have you ever gone to the market and come back empty-handed? If you notice, I'm trying to emphasize that the real world and the stock market are the same. If you don't have a list when you enter, the market will give you products that are nearing their expiration date as a gift. Therefore, you should go to the dealer market by making your buying and selling decisions in advance. Despite being a technical analyst on the last floor, he found his way out of the modern casino by checking the price when the session is closed and preparing his plans, that is, the shopping list, before the market starts. For some reason, successful people in the real world feel themselves in a modern casino and act differently instead of applying their methods that bring success in the real world. For those who make new investments in the stock market, they start with little money in the evening and increase their knowledge over time. Once they learn how the market works, they add the patience, courage, and emotional control required for the investor character. As time passes, money, knowledge, and experience increase, so you can be a good stock market investor.